we are seeing a lot of people making more gains in suburban regions rather than CCR regions because there's a lot of decentralization in Singapore. So I would say RCR and OCR, they actually make more gains than a lot of CCR properties. And because CCR properties attract more foreign buyers, that's also the reason why suburban areas have a little bit more demand in these few years. The size of the apartment matters, the price quantum also matters. Why? This is important to note that if you breach into certain pricing, like let's say you buy apartments that breach into the landed property pricing, then sometimes when you want to exit, it's a little bit more difficult. Because let's say you own an apartment that is about $4.5 million, but when you want to market it, you'll find that your buyers will start to get a little bit confused. Should they go for this or go for a landed? So the price quantum matters a lot now because you're dealing largely with Singaporean buyers, okay? Inventory level is also important. Try to gauge when you want to sell, are there a lot of competition? For example, the one that I show you, 1 and 2 bedders, has a lot of competition now, all right? Now, this is the fourth observation, very important thing to note because very likely it's going to happen very soon. Now, our rates basically has already dipped to 2.8%. There's some new phenomenon happening on the ground, is that sellers can choose to refinance, all right? So sellers can choose to refinance, their mortgage will come down. It means that holding power increases, okay? Secondly is that if, let's say, rates were to come down in September, let's say there's 25 basis point drop or 50 basis point drop, what is also going to happen is that if you are somebody that's trying to buy, then you are trying to buy from sellers that will have increased confidence. Because they know that now interest rate drop, buyer will come back, they will tend to want to increase price. So of course in Singapore, we are all sellers and buyers. We sell and buy at the same time, right? But from a purchasing point of view, it's important to note that sellers market might be returning. So if you want to buy something, it's important to buy when the sellers are not so confident, right? So like now the sellers are not so confident because now it's still a buyer's market. But in a few months' time, we might tweak to become a seller's market already. It also means that if you are selling, when the rates drop, you can hold your price a little bit better because buyers will return, okay? So we already have high rates for 2 years. So this is, if this happens in September, which very likely will happen, because of course there's a lot of coverage already, and it's also aligned with the US election that's happening end of this year. And when US election usually happens, they want to make it favorable on the ground. They will reduce rates and they will start to print money, which is QE. So QE4 might happen. When that happens, then there's a flood of liquidity, which technically asset inflation will happen at a faster rate. So this is something to take note. So basically, observation number 4 is that if you are buying bigger, always know that you should take action at any point you are ready. But if you're buying smaller, planning for retirement, trying to pay off a smaller property, then basically you should only sell when it is a seller's market. Maybe when interest rates are very low, then you sell because you can command a higher price. When interest rates are high, you don't exit if you're planning for retirement. But if you're buying bigger, you should move as and when you're ready.